Hi guys, welcome to my YouTube channel. So this YouTube channel will be about my investing journey, dedicated to how I do my investment during my free time. And this is definitely not a financial advice, because I'm new to this. I'm actually I only received financial training for the past few years, and I didn't start investing until early this year, which is a big regret. I will make a video about this of my history maybe sometime in the future. But today, the video of today is portfolio performance review for the year 2021 at Q3. Today is the date 27th September. Okay, moving. Okay, next, moving on to the aim of my portfolio. Yeah, so this portfolio will be aimed at long-term growth and not short-term growth. You can't expect this portfolio to grow to 10x your money in maybe 1 year or 2 years. No, it's not gonna happen. So yeah, maybe I will be aiming around 20 to 30% per year if it's possible. And yeah, so as I mentioned, this is a long-term growth portfolio, right? So I expect the portfolio to be stable, so that I can sleep well at night. I'm not gonna put my money in the stock market today, and maybe at night I worry about, oh, how I'm gonna lose my money, everything overnight. That's not gonna happen with this portfolio. So I want it to be stable. I want it to be able to put my money aside today and also function well the next day. And third point is that I don't want to lose money from this portfolio. So I'll try my best to not lose money. I'll do this from adjusting my portfolio every quarter. I will talk about that in the rules on the next slide. And yeah, this portfolio is, I also try to keep it as low maintenance as possible. I only want to do adjustment every quarterly or every 2 quarters, depending on that. And maybe if there's any fundamental change to any of the stocks, just that bit. So I'm just hoping maybe I'll spend half hour a day reading about all these stocks. And lastly, and the most important point is that I want to beat the indexes with this portfolio. Okay, if I can't beat the indexes, then there's no point on this portfolio, and I might as well just buy in the indexes. Easier and not to do any maintenance. Now, for the rules of this portfolio. So the first rule is that I will evaluate this portfolio every quarterly or 2 quarterly, depending on the situation. So why quarterly and not monthly or weekly? This is because that sometimes bad news might actually hit a company in the short term, might affect them for 1 month, their prices might drop for 1 month or maybe 2 months. And you can't really evaluate them based on the bad news, you need to see whether or not the whole quarter or the next quarter after that, right? Can they really actually rebound back? And another point that you can see is that you can actually look at their quarterly result. That will actually give you a rough gauge of how is the company really doing, and you ignore the short-term news. As I mentioned previously, these are all long-term stocks that are gonna hold. It's a long-term portfolio, so I'm not gonna evaluate every month or every week. And second point of the rule is that there's no hype stock. I don't want to buy hype stock that can grow 10x today and drop maybe 20x tomorrow. I want to be able to sleep well at night. And then third, I want to see a company that have future potential, not just based on its past result. They've been doing great for the past few years, but we never know. Maybe this company just decide to just stay stagnant and continue producing the same product for the next few years. Those companies definitely have no future potential, and I don't want to invest in them. And fourth point is the growth over the last few years. Other than the future, you might also want to look at the history. They might sound like they have like great future. Let's say maybe they tell you they're gonna create this long-term plan, right? And maybe tell you how they're gonna innovate their product for the next few years. But then for the last few years, they've been losing money all the way, and they have been in the business for like maybe 20 years. So yeah, it might not be a very good idea to invest in them. It might, for 20 years and you're still not earning money, that's actually says something about the company. And lastly, no fairy tale stocks. This is simply stocks which paints a very nice picture about its future, so I can 10x money for the next 2 years times. However, you look at their financial statement, everything is in the shambles. An example will be how the China lacking coffee, they paint such a beautiful picture about their financial and stuff like that. But in the end, whether or not it's a fake company or are they there to just cheat people, investors' money? Yeah, so you get the point, and no fairy tale stocks. And this is actually the most important rule in the whole of my 5 rules. Yeah, so as you can see, this is an allocation of what I did early this year. So I put in equal amount of allocation into each of the stocks, and you can see all of them actually fulfill my 5 criteria in the previous slides when I talk about the rules. So you can see all of them are big names such as Google, Nasdaq, ASML, PayPal. There are more or less products that or companies that you can see around us in our everyday life. Maybe except for Progeny, it's a bit unique. It's a unique case. I will talk about them in the future video and why I put them in my portfolio. Although it's a new company that I built recently in 2019. So this is my portfolio allocation at the start of this year. And this is the portfolio today. As you can see, some of the increase, some of the allocation drop. Yeah, for the whole of this year, right, all the way until now, I did not make any adjustment to the portfolio. I did not buy anything. I did not sell anything. So this is the reason for this. Just I want to see how much growth it have. So yeah, I didn't make any adjustment all the way until now. And yeah, this is how the allocation has grown throughout these 3 quarters. The some has increased, some decreased, depending on the company. So the PayPal actually, from this slide, you can see that PayPal actually have a growth of 89%, while Align have only a growth of 37%. So as you can see from here, the growth is actually still managed to beat out the indexes. Even the lowest growth company managed to beat out the indexes. So meaning to say that if I invest just only on one of these stocks today, I would still have beat the indexes. However, like most of the investors say, don't put all your eggs in a basket, spread it out, diverse a bit. But you don't want to diversify too much. I'll talk about this in the future video. So yeah, so this is the amount of money I invested at the start of this year. I already put in $3,000. Okay, so I put $500 into each of the stocks, and now these are the stocks, how much it's worth today. Okay, so I earned around, the stocks today are worth around 4,800, which is around 60% growth, which is pretty decent, I feel. I mean, other people could have earned maybe like 100%, 200%. But for myself, I feel that in my first year, I managed to make 60% growth is actually not bad. And comparing to the indexes, right, you can see the rest of the indexes have fluctuated around 20 to 18%. However, my portfolio itself has actually gone through to 60%, which is pretty decent. And that actually hits my next goal of this portfolio, which is to beat the index. So concluding this video, the growth is still sustainable as of today for my portfolio, and I might be doing a rebalancing, a reallocation soon, but not 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 right now because I still feel there's growth for some of the stocks inside, and adjustment will be made due to fundamental changes. Let's say if I see any of the stock having like fundamental issues like in long terms affecting it, news that will affect it long term, I will actually lower the allocation or even increase it. So with that, thank you for watching this video.